Welcome back. Well, for now, the SGX Nifty is very, very quiet. So let's get Mitessh Thakkar and Shrikant Chouhan to tell us how to approach the day. Gentlemen, morning to both of you. Mitessh, by and large, this has been such a resilient market. 18,100 is holding. Your thoughts for today, how to approach it ahead of the weekend and the big macro and micro data that's coming through?
Good morning, Sonia. I think, yes, two important things which you highlighted. One, it's a very resilient market. I think, very clearly, while the fact is that we have seen good fall happening in the international indices, I think our markets have, respected the first support levels around the 17,900 mark. So I think broadly this market looks like a market which has run up from 17,000 to about 18,100 is now getting into consolidation. So there's no weakness, but yes, there is mild supply pressure, profit booking at higher levels. I think this scenario might continue for next few days. The idea in this case should be to buy near the support levels or closer to declines towards the lower end of the range, which is at about 17,950, 900 zones, and try to take profits, be slightly nimble over there once we get closer to about levels of 18,200. I think eventually we will break above this level, and once that happens, then I think the Nifty could re-attend the all-time highs beyond 18,005.
Shrikant, what about you? How are you placed in terms of the view and trade?
Good morning, Prashant. Good morning, Surya. I think the markets are very clearly in the range. They are not breaking the upward barrier, which is around 18,200. And on the dismissal of that, we can expect 18,300, 400 sort of levels. On the downside, certainly there is a lot of buying interest, and number of heavyweight stocks are rebounding whenever the markets are falling to the levels of 17,900 or 18,000. So broadly, we are of the view that the markets are still in the mood of buying on dips. And we should be buyer in those companies which are very close to their important support areas or maybe very close to their breakout level. Reliance Industries is very close to its breakout level, and there we are expecting some upward activity in today's date. So we are expecting Reliance to move towards the levels of at least 2650, 2640. We can keep stop loss around 2520, 2510. And the other stock which we like is from the pharma sector. So Prashant, we like Dr. Reddy, which is around 4,600. There we are expecting 47, 4750 sort of levels, and we can keep stop loss somewhere close to 4540.
Okay, all right. Thanks for that, Shrikant. Well, Mitessh, what about you? What are the stocks you're looking at?
Morning, Nigel. I'm going with an all-buy list. I also have a pharma name in my choice of stocks. Divi's is the one which is featured over here. Buy with a stop at 37.30 for a target of 38.80. That apart, Piramal Enterprises had some kind of a big breakout yesterday. That's a buy with a stop at 880 for the first target of 930. Dalmia Bharat Cements is a buy. Keep a stop below 1635. Look for targets of 1700. And there's some kind of a bigger rally developing on the charts of MGL. That's a trading buy for the time being for a target of 910 and a stop place below 875. But I think this is a stock which can possibly even try and scale 950 levels.
All right, Shrikant and Mitessh, thank you very much. Speak to you soon. Again, Manoj Muralidharan of Religare Broking is joining us with some F&O sort of ideas and perspective. Manoj,